Well, since beginning of November, the interest rates has been getting better and better and better. Now we're back to what the rate was around June timeframe, which was in high sixes, which is a good sign. Now, starting next year in 2024, they're expecting the rate to be at mid six fives by end of fourth quarter, which is another good sign. This chart looks like a stock market chart, correct? It kind of is. People buy and sell mortgage-backed security bonds every day, every hour, every second. So more people buy it, the rate gets better. Now it's a safe haven for some people. When the stock market crashes, people buy bonds because it's safer. Vice versa. They go in different directions. Stocks go up, bonds go down, bonds go up, stocks go down. So it's all based on economic news, which we're going to go over right after this. This is a economic report that comes out every day. Now, Wednesday, Thursday, Friday usually comes up with the most important things: jobs report, inflation, GDP, and those sorts of things. Now, they measure inflation and recession. Now, right now, currently, the rate's been getting better because the sign of recession is coming. It's probably already here, but now the reports are catching up to it. Now, let's look at tomorrow's economic report coming out on Thursday. Challenger layoffs, that's huge. Jobless claim, that's huge. Continued claims, not so much. But they're expecting the jobless claim to come out at 222,000. Previously it was at 218. So if this number comes in below 222, like 217, then the rates will go up. Now if it comes in at 222, rates will get better. Now continued claims, they're expecting 1,900, 10,000 continued claims versus 1927K previous claims. Now this number will definitely be higher than 1910, I can tell you that. They've been off on this every single time for the last 5 months. Okay. Wholesale inventory. Now that probably has a little bit to do with it. If the inventory is short, which means supply and demand, so inflation will go up. Okay. And consumer credit, $9 billion. $9 billion U.S. consumer owes. That is crazy. People are spending money on credit cards left and right. And Friday, average work week hours, non-farm payrolls, unemployment rate, and all those, that will have a great impact on the interest rate as well. Now, I think personally these numbers going to come in a little bit lower than what they expect. So I believe the rate's going to get a little bit better on Friday. What they're forecasting is that 180K non-farm payrolls went up from 150K. I think that's too big. Even with the Christmas, with part-time help, I think that's just too much. Average average work week hours, 34.3 hours average. That's about correct. Unemployment rate should probably stay the same because part-time Christmas time comes and they need part-time help. So unemployment should be same. And pretty calm but a little crazy end of the week this week. But I think the rates are going to look better by this Friday. So what does all this mean with the market rates getting better? So if the rates get better, if rates go down to low sixes or high fives, the real estate market is going to go skyrocket and the price will start going up because there's not enough supply for the demand. So currently, where the interest rates are now, is a very good time to buy. So you don't waste your money and time trying to overbid house when the market gets better. You can always refinance when the rates go down to 5.5 or 5.75, and you still be a lot cheaper payment wise by waiting 2 more years. So it's a good time to buy, take the rate, and refinance later because there's quite a lot of inventories. I mean, they're saying it's low inventory, but there's still a lot of houses for sale that you can get a deals on. So I will work on that. And until, see you next week.